All right, this week we are going to share some things with you on what you should do and not do if you're buying or refinancing a house. Hello everybody, my name is Barry Horvath and this is Moving Forward TV with your local market update.
And I am DeLynn Gaston. Thank you so much for joining us on today's show. As Barry said, there's a lot of refinancing going on right now. A lot of people, which is a good thing. The rates are very low and a lot of people want to save money. Don't we all?
Yes.
So there's a lot of refinancing going on, but there's a lot of things that we wanted to touch on, things that shouldn't be done while you're either looking to refinance your current mortgage right now or whether you're looking to buy. There's just some things we wanted to clarify.
Yes, because during COVID times, it's been different.
Things are different.
I always like to talk about the new normal. Maybe this is, people hate that.
The new mortgage normal.
Yeah, it's so different right now in everything we do. I mean,
I know.
It's kind of crazy, but it's good.
Everyone's getting tired of hearing about it, but we need people to know.
Yeah, I kind of like, you didn't talk about nothing else. You went right for the meat today.
I did. I know. Usually I like, tidbit about something.
Yeah. You got no tidbits. You're not going to talk about how good your coffee is. You got nothing, huh?
No.
You got nothing.
All right. Shall we talk about, the fall?
Yeah.
So it really stinks getting
So
older.
DeLynn, if she looks like she's grimacing in pain,
she is grimacing in pain.
So
because she has 2 broken ribs.
Yeah. Yeah, and it's not.
Ouch.
Yeah, it's not good. So
thank you to Dr. Mercer.
Yeah. So for those of you who watch our show and normally know I try to tell jokes and make her laugh and we have a good time, this week I have to ease off that because she does not want to laugh because it hurts her to laugh. So I'm going to ease off the jokes this week.
Okay. I want to make you guys laugh, but not me.
Yeah.
So the guy said to me after he took the x-rays last night, he said, okay, drive safe, be careful, and no Comedy Central for a while.
Ooh.
I know. Yes,
I'm sorry.
I'm
so sorry.
But anyway.
Anyway, so let's talk about
stuff needed.
Yeah, some of the things, especially during COVID, it's a little different than before because there's extra layers of things going on. I mean, I know we've talked about in the past show, for you realtors that are looking to close early in the morning, we're recommending you don't do that because of the extra time and verifications needed because there's a lot of unemployed people out there right now.
Right.
And there's a lot of people that are still going to be unemployed, sadly. That's going on. That's the real world.
Exactly.
And the lenders are looking to protect themselves against those foreclosures that are potential for people who are working in non-essential industries. So if you feel like the extra layer of documents needed and process, just understand why.
Right.
Because we do not want another 2008, 2009 when the whole market and financial markets collapse. I mean, the lenders are being more proactive. We saw it.
Yes.
I mean, soon as COVID hit, it was like credit score requirements went, we could go down to a 580 potentially, and all of a sudden it was up to 660.
Right.
Now it looks like we're back down to maybe a 640.
Right. In some cases a 620 and conventional, although it's not going to be very pretty.
No, and it does.
So things are, it's changing on a daily basis, and we just want to be careful. So, starting first with just the regular stuff. So as you all know, you seasoned professionals out there, you already know the documents to tell your clients to gather together. And if you're a home buyer, or even if you're refinancing, we need the same stuff, just like when you bought the house, because it's a whole new loan. So the standard stuff.
Yes, unless it's an
stubs.
FHA or an IRRRL, it's a little more streamlined.
Right.
FHA streamlined I'm talking about. So
or an IRRRL, he means that is a VA refinance. They call it interest rate reduction, which is interest
IRRL.
rate reduction loan, IRRL.
Yeah, that's a government acronym. We don't make this stuff up.
I know. The mortgage business has more acronyms than, it's...
Do you ever find yourself talking to a borrower and you start throwing in, well, the LTV and the MOUSE.
Yes,
and
I know. I know. We have to be very careful with that. Actually, I learned a hard lesson.
And the APR and they're like, what?
When I used to teach mortgage, when I worked at H&R Block, and I used to teach mortgages to a lot of the franchise offices, somebody came up to me after like day one of this 4-day class, day one, and said, we have no idea what you're talking about.
Yeah.
Because to us, it's, anyway. But we keep on, we're just squirreling off. Anyway, all right, so let's talk about the regular documents. You guys all know it out there. So we need pay stubs for the last 30 days. We need W-2s.
And if you have multiple jobs, we will need it for
all jobs.
All jobs. And in order to count that income, understand, you can't just pick up a second job and say, oh, I'll qualify for more house. No, you have to have that history for at least 2 years.
Right.
So if you've had a second job for 2 years and you switch jobs, that may be okay. But you do need to have that history of 2 years with two
Very
jobs.
important.
Yes.
Right. And then, of course, tax returns, they always do a 2-year average. So we always need tax returns and W-2s. It's not enough just to have one or the other. We need both. And on the tax returns, we need all pages. Very frequently get people who will only send us page 1 and 2. Not going to help me. We need all the pages. However, I only need federal returns. So several times down here in Florida, we have people who are moving from out of state, or they're snowbirds, that kind of a thing. So they file a Michigan return as well as a federal return. I don't need any state return. All we need is the federal return, but we do need all pages. And we need every W-2 and or 1099 that ties to that tax return.
So all pages of the business return, if there's a business return.
And business returns as well.
And you can say, well, I don't do that business anymore, or we're going to need proof that you do or don't to show that.
And when do we need a business return? If you own more than 25% of that business.
Yes.
We'll need the business return as well.
They will find out.
Yeah.
So we will. Yeah, nothing worse than finding out from people later on, oh yeah, I didn't think that mattered. You know what? You should tell your lender everything. Like if you think, oh, I had in 2009, I did a short sale or a deed in lieu or a foreclosure. It was so long ago, it doesn't matter. I don't need to tell my lender. Tell your lender because, we see it where they
think it doesn't matter. I don't think that they're trying to hide anything, but they think it doesn't matter because it was so long ago.
But sometimes back then the lenders were so inundated with these foreclosures and deed in lieus that the deed didn't transfer for 4 years.
Right.
So all of a sudden it plays in the role. And, let us check that out. Let us let you know.
Right. I always say to people, you know what, tell me everything.
Yeah.
Let me know so that I can tell what's important and what's not important. Just tell us everything. I'd rather know too much so that we know how to handle things and which direction to go.
Also on your checklist, we need to know your favorite sports team. We will need to know your pet's name. We will need to know all your children's name and your favorite foods. These are all important to know, right? Sorry.
I know, it just seems like we need all of that stuff.
Hey, we do. Hey, all kidding aside, we do ask for your pet's name so that we can do our Operation Fido.
That's right. That's right. We'll talk about Operation Fido later.
That's a whole nother story, right?
All right, so let's continue on. So on the income section, we need like I said, 30 days pay stubs, tax returns, W-2s, all jobs, and all pages of the tax return. Next is on the asset side, we need your every dime that goes into the transaction. And I got to tell you, this is one of the most challenging parts to doing the entire application. And we need to verify every dime that goes into the transaction. So we need 2 months. We always ask for 2 months bank statements. They're going to do a 60-day look back, the last 60 days, 2 months, all of the funds to see where the money is coming from for the down payment and the closing costs for the house. Want to add to that?
Well, I just want to say, we're doing a 60-day look back. And if weird money shows up, we're going to ask you about it. And There's a real possibility we can't even count it. You cannot just have cash from the mattress show up in your bank account. You cannot just have a gift show up. You have to source it. We're going to need to know where that money came from. So if it's an unusual activity of money you normally don't get, if you sold something on eBay or Craigslist or whatever, that money, if you need it to close, is not going to be counted unless we can source it. So it's super important that we have that documentation.
Right.
And don't think you're going to get one over because, oh, I did it last month. You know, that was 2 months ago. It will show up on your statement. They're going to see that activity. And what the lenders are looking for, it's not to see that you're doing criminal activity, although, you know, there's certain businesses we can't even use anymore, but that's another show.
Right.
They're looking to make sure you didn't borrow money and went into debt additionally to get that down payment. It has to be your money. Show that you saved it, you worked hard to get it, or you got it as a gift. Gifts are always fine from a relative, family member, but we must source them.
I have had somebody not to, because it was something that was acceptable years ago, you know, before the real estate crash, but I actually had somebody who talked about getting I have a $20,000 line of credit on my Discover card. I'm going to do a cash out on my Discover card.
Perfect.
Cash advance on my Discover. Yeah, no, sorry, no. Unfortunately, cannot do that.
You cannot borrow money to get money, although you can.
You can on specific things, but it has to be secured. You cannot do any kind of cash advances on credit cards to get money. However, if you own a car, let's say, and it's free and clear, if you wanted to put a loan on that car, and if we'd have to take the payment into your
Right. So as long as it doesn't affect the debt ratio, you're going to be fine.
As long as you qualify with it, then that is a way, because it's an asset that you have saved up and paid off. So it is an asset and it is allowed to be used.
Or you can borrow from your 401k.
401k is another one. That's an excellent source.
Here's the good thing about borrowing from a 401k. And we don't hit you with the debt ratio. So your ability to purchase a home is not contingent on what that loan payment is. So that's a great way to borrow, and you don't typically pay any penalty or any taxes on that if you have money in a 401k. Of course, it's worth a lot less than it was in January right now.
I know.
But that's another show too, right? Welcome to COVID, right?
So we wanted to...
Although it's coming back. Things are looking up.
They are.
Things are looking up.
And then the other things that we wanted to touch on, so the asset's very important. The other thing that we like to say, some of the challenges that go along with these things when people move money around. So
you love to talk about that.
We try and tell people, don't move your money.
Yeah.
You know, if you have it in a bank, in a savings account, or in an investment portfolio, leave it there until we tell you to move it. People who are constantly moving money around and this account to this account, every time you move it, we have to follow it. So it makes people crazy. One of the things that
it's like a little game, isn't it?
I know.
Okay.
I know.
Where did that come from? Oh, cool. You know, we got to find it.
We do. And
it's crazy.
And then people get mad because they're like, I know, okay, well, we didn't have this statement before. Now I need to go back and get 2-month statements on this savings account that you never told me about, that you just moved all the money to.
Yeah.
You know, so it's a paper trail that we have to create for the underwriter. So we try and tell people, don't do anything, don't move anything, don't change anything. Mm-hmm. Keep everything kind of status quo while you're going through either a purchase or a refinance, just because it just creates a lot of questions.
And normally on a refinance, typically, just so you know, unless you need cash to close, we're not going to need a bank statement.
Right, we're not going to verify assets.
Yeah, so that's something to, you know.
However, so let's go to refis real quick here. So other documentation that is needed. So when you're refinancing your home, like I said, it's a whole new loan, so we do have to verify your income and things like that, and your taxes and your pay stubs, make sure that you're making enough money. Verify credit, obviously. Make sure you're not swimming in debt over your head. But the other documentation that we need are from when you purchased your home, usually you had a survey. You know, you might have had a new survey at that time, or maybe you inherited the seller's survey. But by giving us a copy of that survey, it may, not guaranteed, but it might save you having to get a new survey.
And it's all about saving on those closing costs.
Saving money, right, on the closing costs. People say, well, why are the closing costs so high on a refinance? It's the same. It's a whole new loan. Everybody's doing their job again.
And it could be less because if you have things like the survey.
Right.
Or the copy of the original owner's title policy.
Right. So not your homeowner's insurance, which we do need as well, but if you can go to that big stack of papers you got when you bought the house, and in there's something called a title insurance policy. You can
Not
get
a
us a copy of
commitment.
that. Right. If you can get us a
policy.
copy of that. And then what I tell people sometimes is, you know what, bring in your stack. I'll thumb through it. I know exactly what I'm looking for.
But you have to remember too, some title companies don't issue the policy at closing, so it may be mailed to you at a later date, but they are required to supply that to you.
Yes.
And that gets you a reissue credit. And you don't have to go back to the original title company to get that credit. You can go to any title company to get that.
Right.
So keep that in mind.
So look for those documents. I'm sure you keep them in a safe spot. I always tell my clients when they're closing and they're buying their house, I say, okay, here's this big stack, right, of documents that you just signed, copy of everything. And then I tell them, probably in a month or so, sometime in the next 30 days-ish, you're going to be getting the title policy in the mail, along with usually your original deed. Once it gets recorded and it's written on the title policy, the title insurance company will send it to you. Keep all that stuff together. Put it in a safe, put it in a closet, put it in a big folder or something.
So I'm going to put you on the spot. So the mortgage firm has this cool, we have electronic doc storage.
Yes.
So when you need your file, it's all in there. Are title documents in there? Do you know?
I do not know.
Yeah, we both just refinanced. We should look.
I know. They said, do you want a copy of this? Our title company came and said, do you want me to print this and have a copy of it? And I said, no, I don't want that. I know where you are. I'll come to you if I need it.
Well, I got mine.
Yeah, did you? You said yes. I said
Because when
no.
rates get down to 2, I'm refinancing again.
They're going to be that too next week.
Okay, of course they are. They were at 0 3 weeks ago, remember?
I know. We missed that. All right. So the other things, copy of your survey, copy of your title insurance policy.
And understand on survey, since you said that,
Yep.
the lender does not need a survey.
Right.
All right. And I actually had another lender argue with me, well, lenders don't require a survey. You're absolutely right. We don't. No lender does. But you need title insurance. And in order to get the title insurance, you must have a survey.
Because there's an endorsement on the title policy that says that the title company is absolutely positively insuring and guaranteeing this tract of land.
Yes.
And they're only going to do that if they've seen a survey.
And you will need a survey whether you're buying or refinancing.
Right.
It doesn't matter. You will need it. And as long as there's no changes to that survey, meaning you put in a driveway, you added a fence, you put
in a pool,
any of those things,
right.
you can reuse that survey.
Landscaping, I think, is fine.
Landscaping is fine.
Because that's obviously, but if you put in a
Removable.
fence or
Any-
something like
any
that.
permanent type structure
Right.
is
You
what
put a
goes.
pad down or something, a patio or something like that.
Yep, and
Those
we can
are the
use that.
things that
And
are-
that'll save you on closing costs.
Right.
In fact, we've seen surveys come over on purchases, but a lot of
Right.
new buyers want to have their own just because they think.
And they should. I
Yeah.
think that that's
Yeah.
important.
I agree.
All right, so some of the challenges that we face with some of these things. So that's the standard documents. And all of you, like I said, you real estate professionals out there, you know this and you know to tell your clients this. So some of the challenges that since COVID-19 that we're running into, just so that you guys are aware. I had somebody call me the other day and, we're having closings delayed because it used to be as long as we had enough pay stubs through underwriting, we were fine. But now we have to collect pay stubs up to the day of closing. So the most recent pay stub that the person received, I need that pay stub at closing. They have to make sure that they're still working. One of the other delays that has been happening is if someone, maybe they were furloughed, but now they're back to work. Well, we can't close that loan until we receive a pay stub showing that they're back to work. That happens to be delaying one of our files right now. The person got back to work, but they're not going to get a pay stub for another week or so. So again, just be patient, bear with us. If somebody needs an extension for a few days or something like that, it's because of all of the crazy stuff that's going on. Yeah, please be flexible.
Whenever I talk to realtors now, they just say, we say, oh, we need an extension like COVID, right? Yep. Okay, let's go with that. I mean, there's a lot of extra layers right now.
Just a lot of extra layers. The other one that we're running up into lately, just so, again, so that you guys are aware, is, we get a lot of questions about tax returns. The government requires all mortgage lenders have to verify tax returns. So we collect the tax returns and the W-2s up front, and then we have to verify, because sadly you can make anything up on the internet these days, phony tax returns, phony W-2s, anything that you want. So we have to actually verify what you gave us is what you filed with the IRS. And it's called a form called a 4506T. Under normal processes, we send the 4506 T into the IRS. They process it within a couple of days. We get the transcript back and we compare them and we verify that. Well, since COVID-19, the IRS shut down, as everyone knows. So none of those are being processed. So we're actually having to go to the borrowers. It still has to be done, and they have to pull their own transcript online through the IRS. So again, couple of extra layers, things done a little bit differently now. Patience, a little more time in doing things, and a little more challenging and frustrating for borrowers. This is all new to them. We're a little more used to it because we know what we're looking for, but it's the only way that we're allowed to do it right now.
And your pay stubs must show a year to date, because they are really looking at that right now.
Right.
They are definitely looking at that. They want to know that you are working and are still working. And
they understand if you got furloughed for a little while.
Right.
They understand that.
That's very explainable, and there's a lot of people in that boat,
There are. Yeah. But the good news is we are back to businesses are going back, even restaurants are going back now, and I know that they're opening up bars and things like that soon. The world is, the world is definitely starting to go back.
Got my first gig.
But it doesn't mean,
Saturday.
Yay! But it doesn't mean that everything's back to normal.
No.
It's a far cry from that. This is going to take a little while for everything to process and for the Fannie Mae, Freddie Mac to stop requiring these extra layers. So just bear with your lenders and such. They're not bad lenders. I'm positive of that. We're all just following the rules and guidelines that we're given, right?
You know what? We need to send everybody, and you requested, our do's and don'ts.
Right.
During the mortgage process, because there's so many do's and so many don'ts. Right. And when you're refinancing too, the big one we see right now during refis, I'm amazed at the number of people that entered into a forbearance agreement. I mean,
and I know we've mentioned this.
And we're gonna beat this like a dead horse. I'm sorry we are, but if you enter into a forbearance agreement, I promise you, I know that they're supposed to forgive you for 6 months. They're not forgiving you, they're delaying you.
And they say it doesn't affect your credit. It might not be affecting your credit, but it is absolutely going to affect
your ability to buy a house or refinance a house. If you are in a forbearance agreement, you cannot refinance your house. You cannot purchase another home. In fact, there may be repercussions for the next who knows how many years if you enter in that agreement. So don't get in that agreement unless you absolutely need to. I know they put the CARES Act together, and it's relief and all that. We have people with plenty of money that can afford it, that enter into forbearance, that we've actually had to remove out of forbearance.
You know why? I think it's because the way they sell it, so to speak.
Yeah.
They were telling people, oh, you know what, we're going to give you relief for 3 months. You don't have to make any mortgage payments. And people...
Well, who wouldn't take that?
I know, who wouldn't take that?
There's no free lunch. There's no such thing as...
There's no free lunch.
There's no free... I promise you, it will affect you down the road.
Right.
And when you see a great interest rate or something...
If you don't have to, don't do it.
Yeah, don't do it. Don't do it. Yeah. Anything else on documents?
Because what if they go? What if the rates do go down to 2 in 2 months?
Oh, they're going to.
Yeah.
Yeah. So now everybody's going to wait to refinance.
And then people are going to be calling and want to refinance, and we're going to say, "Sorry, you did a forbearance." There's rules and regulations and guidelines. So,
if you see a rate you like, you ought to grab it.
Right.
If you're going to save money on a payment and you really like it, grab it.
Right.
You really should. The market's pretty volatile. You just don't know what rates are going to do.
The other thing, so the last thing I wanted to touch on in the documents and such, and since COVID, one of the things that we're trying to make a little bit easier is the bank statements. I said that it gets kind of
you want to talk
difficult.
about account check. You hated that.
Yeah, I know, in the
You
beginning
used to
I
hate
hated it.
You were
and
like,
now I love it. So there's
don't do
something called account check that all of the banks in the country, most of the banks anyway in the country, have participated with Fannie Mae and Freddie Mac on. And it's a way, instead of constantly having to get printouts and updates on bank statements and everything, it's a system where we can go into your account and look at it. We can't do anything in there. We can't change it. We can't move money. We can't do anything. It's almost like, when you're on a computer screen and it's grayed out, you can't do anything in that field. All we can do is view it and print it. And that saves you a lot. So every time changes are made and we need to see the earnest money deposit check cleared or something like that, it makes your life a lot easier and our life a lot easier. So talk to us about it and we can...
Oh, it's a great
great tool.
Yeah, it is. It is.
Yeah. So we're trying to make things a little bit easier during these COVID times, but like we said, patience would be greatly appreciated.
Yes, absolutely. And I love our new pre-qual app.
Oh yeah, we have this amazing new pre-qual app.
Yes, it's super duper for you realtors and buyers because you're going to be able to go in. We're going to send you a link and you can look at your payments. For your pre-approval, you can actually print your own pre-approval.
You can change it, so this house didn't work out, or once you saw it, you didn't like it. Oh, but look, I saw this one. You change the numbers. You change the numbers, and it gives you what your closing costs are going to be, what your payment is going to be, and right from there, the realtor can print the pre-approval. It's amazing.
So
it's
if you
wonderful.
find a different house and it's 11 o'clock on Sunday night, and for some reason DeLynn and I aren't available, you can print a new pre-approval. Pretty cool. So let's talk about our upcoming Lunch and Learn real quick.
Yes.
It's
June
9th.
It's June.
Which is
it 9th?
It's
okay.
today.
Hey, how about that?
Hey, so you missed it. But we will have our next one coming up in July. It will be July 7th. For that, it's always July 14th. It's always the second Tuesday of the month.
We normally have them at Carrabba's in Port Richey.
It looks like we'll have limited seating available.
We're playing it by ear.
Yeah,
the
but
last
mostly
few have
done
been
by
on
Zoom right now.
And we appreciate those of you who have hung in there with us and joined us. We've had some great speakers and learned a lot of good stuff. So, but we certainly all do miss our Carrabba's, don't we?
Yes, we do. That bread.
My lentil soup. Just for me, it's special. They do lentil. Well, it's not really just for me, but
yeah, they make it for you, DeLynn. They say it's chicken soup. Sticks to your ribs, so you might want to try it.
I might want to try it. I need to go to Carrabba's. I need to go get my soup.
You might want to try it. So anyway, hope you liked our information this week. Share this show, like it.
And feel free to reach out to us.
Yeah,
if you
forward
need
it to someone. If you got it via email, we're always available. We appreciate you guys. And
thanks for watching. We are Today and Every Day.
Moving forward.
See you next week.
Have a great week, everybody.